Good morning. Thank you for joining us for today's Coffee Talk, where we're going to talk a little bit more about QwickAnalytics today. Traditionally, our Coffee Talks have been kind of confined to the CECL solver, but as most of you probably know, but some of you may not, there's obviously a whole lot more to your QwickAnalytics subscription. And for those who aren't subscribers, a whole lot more and a lot of different aspects of the tool or the application that we don't get to spend a whole lot of time on. And we thought we would do that today and certainly invite questions. We do have a kind of a prepared script, but we don't have any intention necessarily of having to get through all of it. You will get a copy of the slides and a link to the recording today, but just certainly want to point out some things that have been of use and to our customers here recently. Share with you some things that we've done here recently to enhance the tool. And then certainly look for you to ask any questions and talk about anything else you might like to see in the future as a future enhancement. So all of that is a long way of saying good morning and welcome to the Coffee Talk. I'm Sean O'Brien, president of QwickRate, and as always, I'm pleased to be joined by Steve Huntington. Steve, you want to go ahead and introduce yourself?
Yeah, thanks, Sean. Morning, thanks for joining us today on, I guess, Thursday morning here. My name is Steve Huntington. I'm the Director of Analytics here at QwickRate and QwickAnalytics. I've spent my entire career working with community banks all over the country in everything from strategic planning and valuation to M&A, capital planning, and model design and maintenance. And I have spent about half of that career now, or a little more than half of it, working with Sean here in the group at QwickRate.
Awesome. Welcome, Steve. I'm sure it's warmer in North Carolina today than it is in Kankakee, Illinois. A nice 13 degrees.
It was 19 degrees overnight the other night here in Raleigh. So
right.
not as different as I might have hoped.
All right. Noted, duly noted. Again, just a reminder, hopefully you can hear us and see our screen. If you have any questions, certainly use the chat feature or the Q&A box, and we'll monitor those throughout the presentation and either take those at an appropriate break or certainly at the end of the discussion. We are just going to do a few quick polling questions. A lot of them are just, around what you're finding useful and what you might like to see. So just 3 questions. The first one is a little bit of a 2-part question. Oops, I'm sorry. I don't know if I got that right. Let me start that over again. Here. Okay, I launched this. Here we go. Hit the wrong button. Which page or analysis do you find most helpful or like the most? So you can select as many as you'd like. And then there will be a second part to this where you can see at the bottom what other pages or analysis not mentioned above is helpful or do you like. So we'll just give this a minute or so, and then we'll go to the other final question. So again, point being here, again, we're trying to focus on things that are there to hopefully see that you're using them. Secondly, also just try to, is in our never-ending search of what else we can deliver through QwickAnalytics, certainly looking for your contribution or feedback.
So just a point for this second question, that's other pages that currently exist on QwickAnalytics in addition to the checkboxes up top that you find most helpful. Next question after this will be stuff we don't have yet.
Gotcha. Correct. Okay. Well, thank you all for participating in that one. I'm going to go ahead and end that and share the results. And CECL and the bank performance report card kind of topping the list. And then kind of stress test, liquidity profile, performance matrix, and peer watch. So awesome. Thank you very much for contributing and participating in those questions. And then the second question here today is, again, just a long answer. What other types of reports or analysis would be helpful that is not currently available in QwickAnalytics? So, whoops, I got to launch that one. Feel free to put in whatever comments you'd like.
Let your imagination run wild. There's nothing is out of bounds.
Exactly.
Coffee delivery service is highly unlikely to be added anytime soon, but
Yeah, we are, hopefully it will again give us some input as we try to prioritize enhancements as we move into next year. All right, let me just give this a few more seconds. All right, thank you all very much. And we will go, I don't know if we can, see all that or what's shared on that one. So,
Yeah, it doesn't have the details on it.
yeah, sorry, let me
That's
stop
fine.
sharing that. Yeah, let me get back to my presentation. Gotta. Okay. All right, Steve, can you see my screen again? Kind of dancing.
Yeah, I could always see the screen. I just have to
Oh, okay. All right.
close the pop-up box for the polls there. There we go.
Gotcha. Perfect. All right. So again, one of the things that we just think among the many benefits of Quick Analytics, what's our value proposition to you? I think the biggest one is always your ability and our ability to aggregate data to hopefully save you time and make your analysis much more efficient and effective. And so again, kind of our core principle is we always want you to be able to see your data over time, and then always be able to quickly, immediately see, a comparison to your peers. And so, the ways you can use that with your institution are varied, certainly providing information to your boards and management teams. But, really what we've tried to do is just make a very affordable solution that's easy to use with, minimal, friction to get started. And that's what we want to continue to do. So we're trying to do, more of these QA just to get more engagement and just make sure, some ongoing, kind of reminders and maybe discussion around some of the different aspects that are available to you.
And just to clarify, what people ask us frequently, when Sean says very little friction to get going, there's zero friction to get going. People say, well, how soon can I be up and running? We can turn you on with a flip of a switch, and then everything is immediately available, right? We don't need to connect to your core and go through any sort of conversion process with your data because of where we're getting most of our data from. The second that you guys are interested in subscribing, we flip a switch and everything you see today in our presentation is instantaneously available, or could even be available on a trial basis if you'd like to poke around a bit before committing to a long-term agreement.
Well said, Steve. Thank you. All right. So just a listing of some of the more recent updates and enhancements. Steve's going to talk about a data dictionary. One of the common questions we get is often, how did you come up with the value? This value is slightly different from what we calculated internally. Typically, there's a few, common responses to that. It might be average versus point in time, kind of denominators. But the bottom line is we want to make Quick Analytics as transparent as we possibly could for you and for our users, but also, allow you to quickly answer some of those questions without having to reach out to us. So we'll talk about that. Steve's added more data. We've gone, we used to kind of end at 2006, 7, and 8. Now we're back to 2001 in many instances. We continue to add credit union data, more there to come, but that is available with some summary information as well as available in our Excel add-in tool. The universal branch map and competitor branch mapping is much more enhanced. A page that we're going to continue to add a lot to is industry research. There's a number of components there, but we're going to add more. And then finally, we've had a lot of interest and success with the net interest margin analysis. So Steve, I don't know if you want to add anything before we move to the next page.
No, we're going to go over, they most all say see screenshots because we're going to go over most of these. Some of these that we've gone over before in a pre-stage a few months ago, we'll kind of just quickly go over again, and we'll spend more time on things that it's possible that none of you have seen yet.
Perfect. Steve, I'm going to read this comment in the chat about, sure, adding the ability to add their GL balances as a comparison to the current scenario. So that's a good idea. We'll take that one to the IT team and think about how we could best implement that. But certainly that's a consideration worth incorporating.
Yep.
So Ryan, thank you for that comment. Okay. So what we thought we'd start to do today is, as Steve and I, as we were talking, preparing for this, we just thought, hey, we might just talk about some things that we've gotten questions on or have been of recent interest, from our users. And so we're just going to focus on a few of these to get started. Steve, take it away.
Yeah, so these are some metrics that sometimes are just ones that people are talking about right now and looking for. Sometimes they may be sort of hard to find within, as we keep adding more pages and sections to Quick Analytics. We try to keep it as clean and efficient and easy to navigate as possible. But obviously, the more things we offer, the more challenging sometimes it can be to find some of the things that you're looking for. So we thought we'd highlight a handful of these to start with. The AOCI. So on the left-hand side here, that's just our kind of table of contents if you're logged in. I'll touch on these and then I'll briefly show where they are in the tool. But on the balance sheet in the liabilities and equity section, there's the accumulated other comprehensive income line item, which has become interesting and of note, especially over the last year or so. And then uninsured deposits. So obviously, we all know how that got pretty interesting last year. And some of you don't know how we're calculating uninsured deposits. So on the call reports, if you're over $1 billion in assets, there's a line item for it now on the call reports, right? And however, it's called estimated uninsured deposits, even the reported one on the call report. However, for the vast majority of institutions around the country that are under $1 billion in assets, you are not required to put it on the call report. So it's something that we must calculate so that we can get industry standard values and peer data, no matter where you are in size and what type of information you fill out on the call reports. So if we're calculating that value, we can estimate it by taking some of the more esoteric schedules from the call report, like schedule RC-O, and we can get dollar balance data and number of deposit accounts data for deposits accounts that are less than 250,000 and more than 250,000, and do a little bit of math to subtract out the insured portion of the larger deposit accounts. And then we can come up with a very accurate estimate of uninsured deposits for all institutions from the call report data with a couple little tricks. And we've compared that with the reported call report data for the larger institutions that have filed the uninsured deposits, and they match pretty much identically. So we're pretty comfortable with that. But you can find that data at the bottom of the deposit profile page. Something we get questions about a lot is obviously the call report does not have a line item for total CRE loans, right? It's something that you guys obviously have to track from a concentration standpoint very heavily. And so in our loan portfolio page, we have all the call report breakdowns of your loan portfolio, and then in a memo section at the bottom, we've calculated total CRE loans. Now, there's a colloquial definition of CRE loans, and then there is a technical FDIC definition of CRE loans from a concentration standpoint, right? From a regulatory standpoint. The difference being that typically institutions would include all of their non-farm, non-residential loans as part of the general concept of commercial real estate. However, from a concentration standpoint, the FDIC excludes owner-occupied non-farm, non-residential. So if you go to the concentration report, you'll see that we calculate concentrations on a including and an excluding the owner-occupied non-farm, non-residential standpoint. So just wanted to make that clarification because people get confused sometimes there. We frequently get questions that say, well, why our CRE loans are higher than that? And I say, well, because the FDIC excludes them from concentration analyses.
Steve, can I interrupt for a second? We just had a question.
Sure.
So this is the bank overview page. That tab is where we are in Quick Analytics at this point, right?
Yeah, I'm about to go to the screen and share it interactively. I just kind of don't want to get through the slide, and then I'll point out live where they are. Good question.
Sounds good.
Point. I'm imagining this all in my head, but that's because I spend all day there. Also, the loan composition we just talked about, it's broken down by call report segments by default, but recently, well, more recently, as you know, the larger institutions also now have to file, have to do a disaggregated loan loss reserve, meaning the ACL, the total reserve has to be disaggregated into 6 different components by loan type. But of course, those loan types don't match the rest of the call report loan types. But we thought it would be very helpful to not only show your loan portfolio from a standard call report breakdown, but also from those 6 buckets that they include in the ACL, the reserve disaggregation for larger institutions, so that you could compare your reserve in some of those buckets to what larger institutions have for a particular segment. And finally, expense metrics. So we have a page called efficiency and productivity, and it has some typical standard metrics you might see on a UBPR report or from another provider. But we have a bunch of metrics there that are more, I mean, not proprietary by definition, but less likely to see elsewhere, that we think can be very helpful. Particularly a bunch of operating and branch efficiency metrics that we do on a per employee, so a per FTE basis, on a per deposit basis, and even on a per account or per branch basis. So right now, I'm just going to go and show you those 4 pages just very briefly, and where you can find these items. So if I'm going to share, if you can go back just to that screen real quick, Sean, and then let me share my screen.
Sure.
It's going to be screen 2.
I can see it.
All right. So here we are. If we are, let me just head back to, if just for those of you who don't navigate quite as often, this is the login screen. We first log into QwickAnalytics, and if you click on your bank name, this is our guinea pig for today, large community bank up in Maine, or click on my bank, either one, it's going to take us to sort of our financial homepage, right? This is what I was referring to as a table of contents here. You can click on any one of these pages and get a lot of financial detail. If I click on the balance sheet, for example, and there we go. If I scroll down to the liabilities and equity section, you'll see the line item for AOCI and other components. And I can click on it and see this is there's the AOCI, and there are other capital components from the call report from an auditing standpoint. But that's where you would find that on the call report. I'm sorry, on the loan or balance sheet page. If I click on the loan portfolio page, this was 2 of the bullet points that I was discussing earlier. Here is the call report. This is your typical breakdown of a loan portfolio as per all the possible segments from call reporting. However, down in the memo section, we have CRE loans not secured by real estate. That's a fun little ditty that they've added more recently to the call reports. Here's total CRE loans. And you can click on it and get the definition of it there, and the auditing call report items. And if you scroll up to the top here, you'll see here's the RCC detail, and then here is the ACL segmentation. So if I click on this, it's going to kind of recalculate all the loans, and it's going to do it from these buckets here. So all construction loans, rest of commercial real estate, residential real estate, and then commercial loans, C&I for the most part, and consumer loans. These are the buckets that they use for disaggregating reserve numbers for larger institutions. So we can see, kind of look at our portfolio from that perspective too, if it's helpful. Now heading to the concentration report, just briefly, I will show you that. And you can look at your concentration report as a percentage of tier 1 capital and your reserve for those of you who are working within the CBLR framework and aren't calculating risk-based capital and risk-weighted assets anymore, or as a percentage of total risk-based capital. But you'll see here's total CRE loans, excluding owner-occupied, and there's a definition of it. And here's total CRA, we call it total CRE plus owner-occupied non-farm, non-residential. So we show it both ways, depending upon the kind of more colloquial, all-encompassing definition versus the more specific, explicit FDIC concentration analysis standpoint.
And Steve, I would just add, and probably most everyone knows this by now as well, but for the banks that are, taking advantage of the CBLR framework, that's why you might see NA on a bank in some of their capital numbers or some of the ratios, is that they're not completing the
Yeah,
same
here
for
here you'll
risk-based
see that.
capital
Yeah.
uh, that
If you,
that
if
that a
this
bank.
was a CBLR, is St. Anne CBLR?
Yeah, CBLR.
Yeah. All right. Oh, well, I'll do that later. But if you were on a CBLR institution and you click that on percentage of risk-based capital, you're going to see a bunch of NAs here, right?
Yeah.
But since Camden files it all, then you're going to see everything populated. But yeah, when you see NAs in any of the capital stuff, that's almost typically why. The last thing that I wanted to point out from that slide was efficiency and productivity. So if I click on that, all right, there we go. Your standard, expenses as a percentage of total or average assets, efficiency ratio, salaries and benefits per employee, premises and fixed assets expense per employee. Those are core operating revenue per employee. So those type of metrics are less common. Then down in branch efficiency, we look at service charges as a percentage of total deposits, and service charges per branch, dollar amount or thousands of dollar amount per branch. Same thing with premises and fixed assets expense. We look at, total deposits per account. So dollar amounts of deposits per account over 250,000 for accounts, smaller accounts and for larger accounts. So those can be very helpful metrics. And so there's a bunch there that I think get overlooked pretty frequently that can be really helpful expense metrics.
Steve,
Sean?
if you could go back, could you go back to the concentration report? We had a question about
Sure.
multifamilies, being included or not being included in CRE concentrations.
Absolutely, yes. So CRE is, well, actually, I'm not going to find that. If I had, is going to include total construction and land development loans, plus multifamily residential loans, plus non-owner occupied, non-farm, non-residential. That's the strict FDIC definition of CRE, and that for a concentration standpoint. And then, so the regulatory guidelines of being under 300%, that's what's included in that calculation. Separately, you can see that this institution also had 65% concentration in owner occupied. That's why there is a 65% difference between their stated CRE concentration and their more robust, comprehensive, all-inclusive one of 310 there. So that's the difference between them.
Gotcha. Perfect.
Yep. And if these guys were over 300%, then you'd have a little red box here that says outside guidelines instead of within guidelines. All right, Sean, let's go back to the presentation for a minute.
Okay, anything on this page before we move on?
I still don't see it. Oh, no, let's move on.
Okay.
All right. So we wanted to point out that we have some more significantly enhanced branch mapping that's available now. We have what we call the universal branch map. It's right there on the table of contents when you first log into QwickAnalytics. It's not focused around your branch data. It's simply you go in there and you can pick a market, you can pick a state, a city, even a zip code, and search for banks and credit unions, and choose the institutions that you want to map their branch footprint, and then click search. You get that search box there. You can check off the institutions that you'd like to add, and it simply creates a branch map with a legend for whatever geography that you are looking for, down to the zip code level. Or you could certainly, again, you can just check off if you want to pick 3 or 4 competitors and just map their branches in a particular location. You can do that. So that's the universal branch map. Next slide. On our standard financial, what I call our financial homepage there, where you click on My Bank and you see your branch map there. When you click on the branch map, you can zoom in, you can click on any one of the branches and see information about when the branch opened, if it was acquired by somebody else, what the total deposits are at that branch, and sometimes you even get a good Google Image Maps view of what the branch looks like. Sometimes. But now sometimes it's a cow down the road from the branch, depending upon how I have no control over what those Google cars are doing when they're driving all over the country taking pictures of stuff. Just putting the cards on the table. But now you'll notice a green button called competitors. So right there from that page, you can click on that button and it'll bring up a list of all the other banks that are in that county, MSA, or state that you can choose. And then if you want to add a competitor or somebody else to your branch map, you can check off one or multiple institutions and then just click continue, and it'll recreate the branch map and have a different colored dot or shaped dot for each of those competitors. The cool thing about that, in addition to that, is that you can click on any one of those dots and then it comes up with all the branch information for that competitor, right? When they open the branch, what the deposits are, deposit growth rates, all that kind of stuff at the branch level is available right here through the map. So you don't necessarily, it's kind of an alternative to go into a market share page if you want something more visual and less sort of deposit oriented. So yeah. Next slide. Liquidity profile. So this is something we've had on the tool for a good while now. We first started by having kind of a pre-formatted liquidity risk report, right? Kind of like our initial reports, like our bank performance report card and Peer Watch report. We had a liquidity version as well. And then we decided we wanted to go ahead and add just kind of a fully functional interactive financial page with all this liquidity information in it. So when you go to that page, again, right on the table of contents, you can click on liquidity profile. And it starts by just giving you some summary data up top. The first 5 ratios are what I guess at least the OCC would call the early warning liquidity indicators. If you guys remember that they put out a really good publication called they called Directors Toolkits, the Directors Toolkits. And this one was called Red Flags in Liquidity Director Toolkit. And so we got some of our ideas for how some of these ratios they like to look at and they find important, especially from a director standpoint. And so we kind of mirrored some of that in our design here. So you have those kind of.
And I'll just add, Steve, to your point, right? The profile tab and the report, the big difference is the same information, but in the report, you're able to add your own policy limits for anything you might have around any of these liquidity ratios. And so that's really the added component of our report. Information, very similar, but then that additional feature.
Yeah, that's right. That liquidity risk report we have, you plug in policy limits and not only tells you, kind of flags where you're outside of your own policy limits, but it tallies how many policy limits you're inside or outside of over time. So you can track over time your progress or performance liquidity standpoint wise versus your own policy limits. But on this interactive page, you start with these summary ratios up top, but some of these ratios can be a little bit tricky to calculate. And there's a lot of data in it, and some of them can be a little bit esoteric. So if you click down below on the asset detail or the funding detail, you'll see that on the next slide. It will give you a huge amount of granular detail on this is if you click on the funding side, so much so that we decided it would be really helpful to kind of visually show how we calculate things like wholesale funding and short-term non-core funding and some of those calculations and ratios. So if you'll notice all the way on the left-hand side, we have a letter beside each liquidity related line item on the liability side of the balance sheet, starting with L, M, N, O, P, and then working your way down. And then on the bottom there with the blue rows, we actually show you the calculation of how we're calculating what's a non-core liability, what's a short-term liability. And that helps you get an idea more granularly, as this is as much detail as you can pretty much possibly get publicly from a call report perspective when it comes to the inner workings of liquidity. And on the next slide.
And Steve,
sure.
And after we cover this, let's go back and show them where this tab is. And then we also had a question just on where to find the competitor branch map. So maybe we can go back out to the
I think we'll just probably do that a few times as we go here. So this is, and just don't forget the new data dictionary. So when you're in QwickAnalytics on any of these interactive pages, you can click on, if you hover over or click on any line item, it's going to have a pop-up box, which tells you, all right, this is what it is in our data dictionary. This is the full calculation of it, no matter how robust that calculation. When I say it can be tricky, net non-core funding dependence, that's what you have to get 15 or 20 line items from the call report in order to calculate that ratio. And then we have, because it's that's not intuitive looking at the formula, what it is, we have a description. It says, this ratio indicates the degree of reliance on funds from the professional money markets to fund earning assets, right? In colloquial terms, in English, please, right? So we've added that, and you can find that on any ratio or any metric in our platform just by clicking on the line item itself. So I think the next slide is something different. So I will share my screen again.
Yep.
Go in. Oh, there it is. Okay. Okay, we'll do the branch map. Well, I mean, let's see. Branch mapping first. So if you're on the, let me go back to the home page. That's the easiest way to do it. The universal branch map is right here. Universal branch map. So if I click on this, this is the home page. This is what happens as soon as you log in. And if I click on the universal branch map here, there it is. So just map this country. If I want Georgia, and then I want Kennesaw, and I just click search. There are all the banks and all the credit unions, because I didn't exclude credit unions, that have branches in Kennesaw. So if I want to add, well, these are all big guys. I think add those 3 guys and update map. There they are. So you can zoom out and see those are those branches. And this is, again, I chose just Kennesaw, so it's not their total branch map. It's just their branch map for Kennesaw. If I wanted a more comprehensive one, I wouldn't have limited it by the city, right? I just would have clicked the state of Georgia. By the way, you can also add multiple states. So you can pull in all the branches in multiple states if that's something that's relevant to you, and resetting the map. Now, if I want to see kind of within from my page, my home page, my financial page, I'll click on my bank. And this is kind of, again, our financial homepage. And right on the branch map, I just click on the map. Just click somewhere, not on one of the individual branches, but just clicking on the map is going to bring up an interactive version of this map. I can zoom in. Cool thing is, if I zoom in on one particular area or market, you'll notice that it parses the branch list. So instead of all 50 branches or 58 branches that they have, specifically in Waterville, they've got 3 branches totaling 197 million in deposits. So you can zoom in on a particular area for a competitor and see not only their entire deposit base, but what of it is in the area that you zoomed into. So if I wanted to add some competitors, I'll click on competitors, and Androscoggin and Bangor Savings Bank, and I'll add Eastern Bank. I'll go ahead and hit continue. And now, right on in our own homepage, we've got, these are all those branches, ours and the competitors, but I can see right here, the purple ones are Androscoggin, and the, what is that? Aquamarine, right? Aquamarine.
Yeah, let's go with that.
Is Bangor Savings Bank. So there's Bangor Savings Bank. It's got a similar footprint to Camden, actually. And Androscoggin is focused more in Lewiston and Freeport type area. It's a gorgeous area up there, by the way. So that's where you find those. And the other question was where we find the...
Just show the liquidity profile tab.
Oh, yeah. Sorry. Liquidity profile. There we go. So we can see here the summary ratios, including the net non-core. That's the one we were just looking at. And if I click on asset detail, I get all the relevant line items on the from an asset perspective that are liquidity related from the call report. And again, I can click on any of them here. And then if I want the funding details, I can go down here. And so you can really dig into and drill down into all of those primary and even more esoteric liquidity metrics and ratios, and see where they're coming from, and kind of track your progress over time, and then report to the board.
Perfect. All right, I'll move back to the presentation for us.
All right.
Second to reload, and then yeah, I think you just had one more slide on the data dictionary.
Oh yeah. So not only can you click on a line item, but also and get that detail. But right on top, wherever, when I was sharing my screen, there's kind of a ribbon, right? A blue ribbon right on top of the browser, which allows you to search for an institution or click on my bank or anything, or click on your peer groups. And there's also a line item. It says right there, right on the top of the screen, no matter where you are, you can click on data dictionary, and that'll pop up with a page where you can type in and search for any line item. You can type in core operating earnings, type in NIM, type in whatever you want, and it's going to show you every line item in our database that includes that and how it's calculated and where it's coming from on the call report and everything else. So, yep. There it is. It's the blue button. Sorry, I should have circled it, but on the top right there, you'll see on that blue ribbon, there's data dictionary. And if you click on that, this is the page that'll come up. You can search for any field in our database and get the information. You can also search for any call report field. So, if you see the calculation from the call report of Archon 2163 and you don't know what that is, because I'm the only person who knows what all of those are, you can click on the call report field list and type in Archon 2163. Don't put me on the spot, and it'll tell you what that line item is on the call report, what the definition from the call report is.
And that's just a quick preview into Steve's mind. Yeah,
Oh, there we go.
I just needed to click a little.
You don't want too much of a preview into my mind, Sean, because my kids again think I have another child named Cecil at this point. So work and home have sort of mixed together.
Exactly.
All right, what's next on here?
On to the next one. All right. So I think Steve's going to touch on this, but I think this is a great page that he introduced a few years back. I think almost now a year and a half or so ago.
Yeah, 1 year ago.
But again, I think the beauty of it is, both just the ability to see both, right? Just kind of on a line item basis with numbers, and then also just kind of the heat map as well. So Steve, take it away.
Yeah. So I'll share my screen in a second to show you some of the enhancements that we've just made, or not just made, but in the process of making to this page. But there's two views that we have for net interest margin composition. The first view is the one on the right there, where this is kind of what you would see on a 10Q or K, right? An SEC filing for a publicly traded institution, where we show the income or expense, and then the average balance, and then the resulting yield or cost. And you get to see it for all of your interest earning assets, and then all of your interest bearing liabilities. So it is a complete margin, yield, or cost decomposition, seeing numerator, denominator, and then ratio. And you can compare any two periods that you want. You can compare 1 quarter to the linked quarter, or a quarter 4 quarters ago, a year ago, or on a year-to-date basis, between year-to-date, June 30th of this year versus year-to-date, June 30th of last year. However you want to compare. This does not have peer data on the right-hand side here. It's just an analysis of your margin over time. And then we've added in there, we think is really helpful, the change in income or expense due to rate and volume. So those are kind of those rate versus volume, right, kind of comparisons. And we show the math, and we see, all right, for this particular yield, your yield on loans went up 30 basis points. That was mostly due to an increase in rates, or mostly due to an increase in volume of that particular earning asset. And then what the change is in your yield. So 303 versus 389 is negative whatever it was, a decrease in your yield or cost. The decreases or declines, things that are not good are red, and things that are good are green. So obviously a decrease in yield is red, a decrease in cost is green, because that's a positive thing. And then finally, margin contribution, change in margin contribution. The margin contribution calculation is something that was done the FDIC did a study of this a long time ago, and it's not something we see very often anymore, but we think it's really a really helpful way of thinking about from an ALCO perspective, how different earning assets and liabilities, how they're contributing to your overall margin. And so the change that we've made, or we're making right now, is we're adding a margin contribution in to each period the column on the right just shows the change in margin contribution. So a positive change, this is contributing more to your margin, or this is contributing less to your margin than it was in the previous period. But we've now, I'm going to show you here, I'm going to share on my screen how we're adding the margin contribution for each period. So you can really track that metric over time. So no further ado on this, let me go ahead and share my screen so you can see it. This is still in development, so you guys are getting to see a little bit how the sausage is made. So I apologize if the formatting is not perfect at this point, but I wanted to give you an idea. You'll notice that big orange bar up the top suggests that that is not a live version of our site. Down here, this is the current page, but the column we've added is this. We've always had a change in margin contribution, but what we're showing now is what was the margin contribution for the third quarter for, let's just pick yield on 1 to 4 family loans, right? In the third quarter of this year versus the second quarter of this year. And we can see, income of 25 million versus 24.5 million on an average balance that increased slightly. So you had a yield of 478 this quarter, and you can click on the actual values and get the calculation, by the way, versus 472 in the previous quarter. So obviously the yield has increased over the last quarter, more so due to an increase in rate than an increase in volume, but there was a slight increase in volume as well. There was a 6 basis point change in the yield from 5 or 6 rounded from 180 or 181 to 186, and the margin contribution, from 472 to 478 was the increase in yield, and the margin contribution was 1.86. What does this mean? That means of your net interest margin of 2.55%, 1.86 or more than half of it came from your earnings or your income on 1 to 4 family loans. Not surprising, because this institution has over $2 billion in 1 to 4 family loans. But you can see what that margin contribution is, and you can track it over time. And these all will add up. Like each of these margin contributions, if you add them up, it adds up to your total yield on earning assets. So it's an additive calculation that adds up to your total yield. And down here, all these negative margin contributions, well, these all add up to your total cost on interest-bearing deposits, total cost on total deposits, and then total cost of funds. So it's an interesting way to see, kind of from an additive perspective, how much these different components are contributing to your margin. And then I know that's kind of a weird concept to digest. And so we have a discussion here of what that margin contribution is. And if you click on this link, it'll give you all that you ever wanted to know and more about the margin contribution. This is a Fed note from 2015 where they discuss the contribution to NIMs, and this is where we got the idea for that calculation. Sean?
Perfect. Let me grab back to the presentation. And so again, as Steve just illustrated, this is going to be the coming page soon for the enhanced.
And I missed the waterfall chart. I didn't show you guys, but right there. So waterfall chart, if you guys are familiar with this sort of a charting, it kind of, there you have a starting point. That's the blue bar on the left. And then each component that contributes to it, right? You had a slight decrease in margin due to yield on cash and equivalents went down, yield on securities went down, yield on loans went way up. So you see a big green bar there. Cost of funds went up. So that kind of decreased the margin a little bit. But then non-deposit liabilities had a change in volume. And so you get to the end. So it tracks. These are all the things that contributed to your change in margin, your overall change in margin from a visual perspective. So we think that will be kind of helpful. So this is really like, ALCO Committee 2.0 right here type analysis, and can be really helpful if it's a concept, you can feel like you can get your arms around.
Yeah, I think this is a really great, the waterfall edition, I think is just tremendously helpful, for to really, again, as Steve said, take it from just from a numbers, presentation to a visual, which again, as a board member in a small community bank, I know is really helpful as when we share and discuss this with our ALCO committee. Thank you for the nice comment. about the margin analysis. Thank you.
And that waterfall chart is going to be but right now, most of our pages have those 3 summary charts up top. The net interest margin page doesn't. It's going to have 1 summary chart up top, and it's going to be big, and it's going to be the waterfall chart.
Waterfall.
If you choose 2 different periods or 2 different durations, obviously the chart will recalculate to be for whatever durations and points in time that you like.
Perfect. Okay. Moving on, this is another enhancement. This may not impact all of you, but for any of the banks that trade, you might be curious. And if you are a bank that trades, this might be really, really helpful. So Steve, take it away.
Yeah. So using our same guinea pig, Camden National Bank is a few $1 billion in assets now. They're I guess, what do they call them? Just a pretty large community bank, obviously. And they have a holding company. That holding company is large enough now that it has to file the consolidated FRY9C type stuff, right? And then they also have a ticker symbol, and they trade. CAC is their ticker symbol. So if you're on the bank's page, there's a link right there to say, hey, do you want to look at the holding company or search for the holding company? You click on it, you're going to get a financial homepage for every holding company in the country, even if you guys just have a parent company only, non-consolidated holding company, kind of a shell holding company for smaller community banks. There's a page like this, obviously not with stock market information for the most part. But for Camden, since they file consolidated, all those financial pages that we have, or almost all of them, we have a Y9C consolidated holding company version of. So you can click on any of them here. We also have stock price information over time. We have valuation information. So, price to tangible book value, earning EPS, diluted, trailing EPS, dividend payout ratio, et cetera, et cetera. So all that kind of public stock market information is there as well. Since they file with the SEC, they file 10Qs and Ks. You can also have access and see all of their SEC filings right here on our page. You can click directly through to their SEC 10Qs and Ks. We've also templated some summary financial information directly from the Qs and Ks. So if you want to see it, templated financials, not from the regulatory side, but from the public kind of company, Edgar, you can see that right on our page as well. We have ownership information now as well, including institutional and inside ownership information, and officer director details where possible, and then links to websites where that information is more currently updated, if that's where it mostly resides. If you are, for example, Exchange Bank in EXSR in Santa Rosa, California, they're publicly traded. They do not file SEC documents. They do have a plethora of company reported information, right? They do press releases each quarter, proxy statements. They do presentations every once in a while, investor presentations. We gather and aggregate all of that stuff at every level for every institution. So for Exchange Bank, for example, if you click on their earnings reports and documents, there'll be those links, quarterly report you see there. You can click on them and it'll go directly to their actual press release and quarterly report as a PDF. And we scrape all those documents. We scrape the investor presentations, the press releases, the company websites, all of it. And we gather all of that publicly available company reported data coming directly from the bank, not through Edgar, not through the regulators, and put as much of it as we can here so you can even see that information. So that table you see on the right is on our site, and you can search by quarters or years or whatever. It is coming directly from their press releases and earnings reports, which is cool.
Steve, just to go back, a couple of questions about the NIM page or comments. One,
sure.
Just a reminder, there was a question about they don't see the waterfall page yet because it's in development. But what's our expectation for timing on the release of that?
In the next 2 weeks. It might have been this weekend if I wasn't doing this. No, just kidding. But I think it'll be in December. It's already completely done. I'm just trying to get that chart to be as attractive as possible. So I'm working with our programmers to make that as visually impactful as possible. But all the data is correct, and the margin contribution columns that we've added are accurate and ready to go. I'm just kind of tweaking that chart to make it more helpful. So my expectation is it'll be a week from tomorrow. Well, sorry, not this weekend, but the following weekend, and probably worst case scenario, one weekend after that.
Gotcha. So again, it's in development. So we were showing you our staging site. So it's not there yet, but will be. The second one is really more of a comment on formatting. So the comment came in that they like the NIM volume report, but it prints on 2 pages. Can we make it so that it's only on 1 page? So it's a helpful hint. And then secondly, for the NIM reports, it was to see if we could see it also year to date or quarter to date. So just a couple of.
So for the NIM page, we do it is there year to date and quarter to date. There's a drop down box up top where you can choose.
You want to go ahead and show that? Just
if you go, I think it's on the slide.
Oh, it is. Okay, hold on.
Yeah, if you go back to the
Shoot.
first slide. That's right.
That's my fault. Yeah, okay, gotcha.
So well, go up. Yeah, so right, sorry, down right there. So on the right-hand side, that's what the whole table looks like right now. You choose period on the right there, choose period type. It's MRQ, but you can choose YTD, and then you choose the 2 dates. So 3/31/2024 could be 9/30/2024 and 9/30/2023, and then you choose year to date instead of MRQ, and it'll calculate everything on a year to date, 3/4, 9-month basis compared to 9-month basis.
Gotcha. Thank
As
you.
far as the printing, I'll look into that. Whenever we tweak any of these pages, we've got to completely rebuild all those print exports, which is really fun interacting with Microsoft and the default print formatting. But I'll see if I can get it to fit more attractively on pages in landscape or portrait mode. That's a good point. So I have a note of that.
So then the follow-up was the viewer of the report cannot tell if it's year to date or quarter to date.
Yeah, that's well. I mean, if you're exporting it, if you're printing this or exporting it, it just has the dates but not the duration. I'll add the duration, the period type up on the top left of the table in the gray section there. I'll add that. Add duration. That's a good catch. Thank you.
That is a very good catch. Thank you. Thank you, Amy. That's very helpful. Okay. All right. So Steve's making a note. Let me get back to where we were. I know we're getting up on the hour. We likely will not get through all of our slides today. But let's see. I don't know if there's any of these, the M&A. Maybe do you want to talk the M&A page, Steve, or do you want to talk?
I can go through it pretty quickly. So when you first log in on that homepage, you can if you scroll down, you'll see an M&A transaction summary, kind of the most recent M&A transactions that have happened. We have a comprehensive database of all of the bank M&A transactions going back decades. And you can click, you can go to this page and you can sort by your state. Say, I want to see, all the banks that are targets from Georgia in the last 3 years, and it'll list all the transactions where the target was in Georgia. You can search by the closing dates and put in ranges. And then you see just kind of a summary here of the details. If you click on the recap button, if you scroll down to the next page, it's going to give you all the details of a transaction that are publicly traded, right? That are publicly available, including multiples, deal multiples, estimated cost savings. We do a pro forma contribution analysis, which is kind of surface-ish level, but still can be very helpful for buyer and seller. We have a pro forma footprint map that'll kind of put all the branches for each the institutions on a map. If they made press releases, any documents that are publicly available, like an investor presentation from the buyer or the seller, all those are linked directly here. And even the financial advisors and the legal counsel that was involved. So everything about that deal is available right here on this page, and in the Excel add-in as well, if you want to kind of search for a particular metric over a large number of deals. Next page. And we have industry trends from a M&A standpoint, right? That's a 24-year summary of deal price to book and price to earnings deal multiples for bank M&A. And if you click on the deal activity tab, you'll get to see how many deals have been announced and closed over all those periods of time as well. So it is a pretty robust database of M&A information, even though a lot of our users, you only interact with this not on an everyday basis unless you're actively, considering acquisitions. But when you need this data, it's really great to have it. Credit, we've talked about the industry research page before. It's a very dynamic, interactive page. where you can get kind of really granular credit trends and you can make it very visual, right? So this is just an example of, hey, I need to do a deep dive of some credit trends to justify some of my CECL Q factors, right? You can go in here and say, I want to see 1 to 4 family loans, and I want to see 30 to 89 days past due. So I want to track, emerging credit trends, and I want to do it over a 7-year period for my bank and for all the community banks in my state and for my competitor down the road. And then I want to overlay on top of that unemployment rates, so I can see some correlation between when I'm having increased past due loans and when the economy has fallen off a cliff. So you can do any of that very easily and very dynamically. This is an example of the ACL. So I wanted to see what let's say I'm Camden, I could see what my ACL was over the past, I think I just did the last 12 quarters, versus the average for all California banks versus UBPR peer group 5. So a couple different peer groups. And then I can overlay on top of that, the yellow is the Fed funds rate. And we can all tell, we all know when that started to shoot up in the second half of 2022. And so it's a very dynamic, as soon as you change something, the chart kind of refreshes magically on the fly. So it's a very helpful visual tool. And this is an area where we're putting a lot of resources into enhancing, coming up with a lot of different visualizations, more economic data, economic projections coming in here, lots of stuff coming into the industry research page moving forward.
Yeah, I think that was really the point we wanted to make, is that, we started us off with just the loan credit metrics. We added the other capital metrics and performance metrics. But as Steve pointed out, this is an area where we want to, again, give you, almost access to, as much as we can in the tool. And so more will be coming here. So it's just a presentation. Yeah. It's a different way to, like Steve pointed out, right? Maybe, support a specific question or point. Again, I think a lot of times, just always being able to see your competitors. A lot of times we look at point in time, where's our ACL compared to our peer this quarter? But it's helpful over time, right? Particularly when you're, if maybe there's a discussion around, being too light against the peer or too long, right? You can say, hey, over time, this is kind of where we've always been or not been. So I think it just gives you a lot of flexibility to bring in perspective and context to questions you might get from auditors, third parties, directors, et cetera.
Yeah, and I already forgot what I was. Oh, so for example, on our poll at the beginning, a lot of you really like the performance matrix. The performance matrix, as you know, is a heat map of your ratios, and from a kind of a bad to good color spectrum compared to the peer group. What if we had a performance matrix that, instead of showing each of your ratios, showed each percentile, the 10th percentile, 20th percentile, all the way up to 90th percentile for your peer group for each of those ratios? And then you could sort of plot where you are within there, but instead of looking at your ratios, you're seeing the peer spectrum from a decile standpoint, from percentile rank. So there's a lot of really good industry trend type visualizations that we have had on the back burner for a while. And this is going to be the homepage for a lot of those types of metrics.
Yeah, okay. Perfect. All right. Next up.
Well, this is just, this is just asset quality detail. So I'm using that same example of, hey, I'm trying to get more detail for my ACL Q factor justifications, going to the allowance for credit loss page, which shows that those large banks that have to calculate reserve for each of those different segments of their portfolio. You can track not only peer trends in the total reserve, but peer trends in reserve by those 6 segments for larger institutions. And so that's another place you can just kind of go to get more data.
Yeah, and I like this, again, just to kind of, again, directionally, which way is the wind blowing? I think this is a really helpful page that I look at quite a bit. For our little bank.
Camels. We've talked about this before. I'll go through pretty quickly. There's a lot here. There's a couple different visualizations that we have, but we have a lot of users who kind of like monitoring their performance from a Camels framework, right? Capital, asset quality, management, earnings, liquidity, sensitivity. I got them all. And so you can track it kind of on your own basis. These are your trends over time, and you can compare it to your own benchmarks. Or you can click on the next slide. You can click on the peer ranking. Instead of looking at just focusing on your trends, you can see where your Camel's framework performance is right now compared to your peers. So this is the performance matrix from a Camel's framework. And then on the right-hand side, you can choose 5 quarters or 5 years and see that trend, see a visual color-coded trend over time for how you're performing compared to peers from a Camel's framework. So yeah, some of you.
Yeah, and again, our idea here, obviously, Camels are a proprietary, assessment that the regulators are doing, but certainly there's metrics that are contributing to those assessments. And so, our belief here was, hey, we can show you things that are contributing to a particular rating. And as Steve pointed out, you can see how you're comparing to peers, but then also how you've trended, over a 5-year period of time. So again, just another visualization to either, give some context, paint a better picture, make it more explainable of where performance has been and where it might be going.
Yep. And then I think we can skip over this. This is just, we get questions a lot about custom peer groups. And, like I want to create a custom peer group, but I don't want it to be all the banks in this area. I kind of want to handpick banks that are more like me because of my business model, or because I'm a de novo, or because I have a focus in X, Y, and Z from a loan perspective. This just kind of these slides, and you'll get a copy of these slides, by the way, when we send the presentation out. You can look at these slides and it kind of discusses what the difference between a specific peer group and an automatic peer group is, and how they're important depending upon what your goal is. So you can just kind of flip through those guys.
Look, yeah, and then also that little question mark you can always click on. It'll give you explanations as well. So but here Steve laid them out for you.
Yeah. So specific custom peer groups is where you're picking them, hand picking them for a peer watch report, right? Where peer watch reports, for those of you who use them, it's you and each of your peers individually side by side. That's why we call it our side by side, right? And so you're picking a handful of peers, not 50, but like 5 or 10 or up to 11. And you get to see each of them individually and the group as a whole, and you get these deep dive about particular ratios from that perspective. Next slide.
Yep.
And where you can go directly from your, this is something we added recently, from your deposit market share. Just a lot of people say, hey, I'm looking at my market share table. Can I just quickly build a peer group directly from there? Yes, you can. Check on directly from market share tables, check on the institutions that you want, and then click create a custom peer group with those institutions. Or click on the bank name and it'll take you to their financial homepage. Everything we've shown you today is available not just for your bank, but for every bank in the country. So wherever you see a bank's name, you can click on it. You'll get their branch map. You'll get their performance matrix. You'll get all their financial interactive pages. Automatic custom peer groups. Yeah, they're automatic custom peer groups are important because of survivor bias, right? If you're looking at a 20-year trend of asset quality and you're only including banks that exist today, you're not getting a good idea of what the asset quality was like in 2010, when the worst banks back then don't exist today to tell the story, right? So you want to make sure that you're looking at all the banks that existed back then if you're looking at asset quality from back then. So that I just did a little study there that showed what a huge difference asset quality trends can make if you are depending upon how you build a peer group. So I'm happy to talk about that on a one-off basis if somebody is as nerdy as I am about it.
Yeah, and it comes up more than you'd think, right? So it's really whatever objective you're trying to accomplish with your peer group. I think Steve, like he's tried to lay out here, we've really tried to give you the ability to customize it for not only the specific institutions you want, but for the timing of what you're really trying to compare to.
Yep. And yeah, you can skip.
Yeah.
And then I think the last thing is just the add-in tool, the Excel add-in tool. We're not going to go into a deep dive right now of it, but there are some slides here that show how it can be used. It's a way to, everyone who has a QwickAnalytics subscription can use the Excel add-in tool. You download a little piece of software, it opens up right in Excel, and all the data and all the analysis that we do on our website, you can do directly in Excel just by logging into our tool in Excel. You can create templates, you can pull in peer data, you can pull in your custom peer groups. You can pull pretty much anything that you want over time and link it to any presentations that you have. If you've got a board report with certain charts and tables and formatting that you love, but you want to integrate QwickAnalytics data into it, You don't have to copy and paste from our website or export it to Excel. You can build those queries and that stuff directly in Excel. And each quarter you click on one button, refresh, and it updates it all for the next quarter. And then it'll update any charts or tables or PowerPoints that you have linked to that Excel file. It's a great tool. It's kind of an advanced tool, but it's a great tool. And I'd be happy to spend some time walking through it with any of you if you need to kind of just do a one-on-one about it.
Yeah, it really is a good tool. We've done webinars in the past. We'll certainly do one again next year, but we can certainly send you,
Yeah, we can send you a link. We did a whole webinar just on the Excel add-in,
just
and
on
we
the
can
add-in
send you
tool.
a link to that webinar. Yeah.
All right, so I know we're over the hour. Appreciate everybody's time and patience today. You will get a copy of the slides. Certainly, if you're, love data like Steve and I do, certainly the next level with us is IntelliCredit, particularly around your loan portfolio. We've been offering and continue to offer a 3-month trial. Again, we know it takes some time to get up and going. We want to make sure you would see the value that we think you will. So certainly encourage you to take us up on our 3-month trial for IntelliCredit. We'll be back tomorrow with our Coffee Talk webinar at 10 Eastern. And then on the 20th, you may or may not have seen our IntelliCredit division introduced a loan level stress test. So we're going to do a Coffee Talk where we'll discuss that in further detail with Larry and David from our IntelliCredit team. So I know the timing on that one was tough. We wanted to get one in before year end, but certainly encourage you to register. You'll get a copy of the slides and a link to the recording. So I thought this was great today. I appreciate everybody's time. Any final questions, go ahead and send those. Steve, anything before we let everybody go and talk until we talk to them tomorrow?
I think I've thrown enough at the wall for today.
All good. All right. Well, if you're in the Midwest, stay warm. I guess anywhere in the country, stay warm. It's that time of the year. But thanks again for joining us today. We'll look forward to hopefully hearing or seeing you again tomorrow on the Coffee Talk for CECL. And otherwise, have a great weekend and a great holiday season. And we will talk to everybody again tomorrow. Have a great
Thanks,
day.
everyone.
Thanks.
Yep.